CoreWeave is basically is a company that takes all these GPUs and rents it out to people for whatever they want to use. So they do get the dips on the most latest equipment that is sold by NVIDIA, and then the clients can. And now I did show that Meta is buying directly from NVIDIA as well, but in this case, they're just going and outsourcing the entire infrastructure for an amount of $14 billion, which may be a very small piece of Meta's overall capex for AI infrastructure, but it's still a start that they are now leasing capacity rather than building it in-house.
So how should we think about this in the overall growth of AI? I mean, this feels like incremental spending to me, but I'm not sure if it's just shifted somewhere else. When you see announcements like this from CoreWeave, how do you kind of weld it in, or kind of weave it into the larger picture?
So every company, every hyperscale cloud provider right now, whether that's Microsoft or whether that's Meta or any other company that's out there that is spending a lot on capital expenditures on expanding their AI capabilities, they have two options. They can either build it themselves, or they can go to a specialized vendor like CoreWeave and rent it from them or lease it from them. Microsoft has said that they are really into expanding their leasing capacity or capabilities down the road, which is good for companies like CoreWeave. Their job is to build only this infrastructure and rent it out to whoever wants it.
Okay, got it. My other question when it comes to CoreWeave and all of this, all these deals it's making with these cloud providers is that they're also raising a lot of money. CoreWeave is tapping the debt market, or there's expectations that it may tap the debt market. Is there going to be enough demand to meet what it wants to sell?
Yeah. So here is the case. When it comes to a customer like Microsoft or Meta, which all of us know have a lot of cash flow coming in, if they have signed, let's say, a 5-year deal, 7-year deal, you kind of know that the money is good. It's much easier to raise capital than let's say, from a brand new company that may not have that amount of cash flow coming in. So I would say, one should not be concerned that Meta is not good for that money. I don't think that's going to be, a concern for anybody who's giving them the bonds or the debt for that.
Yeah, Meta raised $29 billion in a financing package for a massive data center in Louisiana. Last week, Oracle raised $18 billion in bonds as it builds infrastructure for OpenAI. So the markets are open for this kind of trade, it seems like.
Yeah, apparently they are. And the other thing with CoreWeave, of course, is that it has an increased commitment from OpenAI. It's got this big customer in Microsoft, I think makes up 71% of its revenue. How diversified is CoreWeave's customer base right now?
See, when you see the CoreWeave's first biggest customer was Microsoft. Microsoft didn't have the capacity to run a lot of their AI workloads, so they went to CoreWeave. So, frankly speaking, I understand that 70%, but, this is an area where everybody needs capacity. So, for us, it is an issue, but it's not like, it's not a deal breaker when it comes to the quality, or even you look at the fundamentals of somebody like a CoreWeave. Now, what's happening is other cloud providers are going to them and say, whatever excess capacity that you have, we will take that as well.
Are there other companies that are going to come public here, like CoreWeave, these neo-cloud companies?
Yeah, I mean, I'm sure a lot of them are gearing up for it. CoreWeave is probably the biggest one that's out there. We saw Microsoft signing another deal recently with Nebius, I believe, and that was a very similar arrangement where Microsoft is going to them and saying, okay, for the next several years, this is the kind of money that or the capacity that I want from you, and this is how I'm going to give you the money to fund it, basically.